Hello, everyone, and welcome to the Altos Trading Live Strategy Session with Jeff Tompkins. This is your host, Richard Van Rich, and we have Craig Board with us here in the chat. It's the last day of the month. Another one is in the books. Probably one of the fastest Januaries I think I remember having. Jeff probably feels the same. Hope you guys are having a wonderful week so far. I've got a lot of great information to go over, recap on the month, talking about what's going to happen next month. Really excited to have you guys with us tonight. If you do have any questions at all, you'll notice your microphones are muted, but there is a chat box located at the bottom of your screen. You can post any questions there, and we'll get to those throughout the evening tonight. If you do have to hop off for any reason, don't worry. This is recorded and will be available in the members area later tonight and also on YouTube sometime tomorrow. And if you're watching us on YouTube, please like and subscribe so you can catch our future videos. We're putting out a lot more videos as the year goes on. If you have any questions about your account, access to Zillion, Trade Trend, open trade alerts, anything about your membership, email support@altostrading.com, and we'll get to those sometime tomorrow. Before I bring on Jeff, let me read a disclaimer. Altos Trading LLC and Trade Trend Zillion software is intended to be used as an information server for subscribers and includes opinions as to buying, selling, and holding various stocks and other securities. However, the publishers of Altos Trading, Trade Trend Zillion software are not brokers or investment advisors and do not provide investment advice or recommendations direct to any particular subscriber or in view of the particular circumstances of any particular person. Altos Trading LLC, including its owners, do not accept responsibility for any decisions made by subscribers using the software and subscribers to the Trade Trend Zillion software or any other person to buy, sell, or hold securities should do so with caution and consult with a broker or investment advisor before doing so. All right, got that out of the way. That being said, let me bring on Jeff. Jeff, if you're there, you want to grab the mic?
Greetings and salutations. Welcome, everybody.
Can you believe it's the 31st?
Yeah, I mean, it's like, I guess the older you get, the faster time goes. I mean, I'm still only 21, but it still goes by pretty quickly.
You too?
Yeah.
I haven't been carded in so long. They're like, yeah, you're old enough, buddy.
Yeah, it's kind of an insulting thing, especially when you go out with your wife. My wife's 7 years older than me, and she gets carded, and I don't.
Yeah, my wife did it too. That's funny. Man, how things going? Did you have a good month so far?
Yeah, it was a good month. I mean, nice to see the markets rally to start off the year. And so far, earnings have kind of been somewhat mixed, but we're still getting some decent earnings rolling in, and so that's kept the markets afloat. So yeah, had a great month this month, and I hope it continues. And got some fun stuff to look at tonight. So Ryan, we'll get the charts up here in just a sec. Hopefully you can see the screen though. Okay.
Yeah, we can see it.
Yeah. So we've got some really critical levels to keep an eye on this week, and also some critical market moving events on the horizon, like the FOMC meeting coming up. So we'll take a look at the market watch and see what to keep an eye out for this week. In addition to our key levels, and then we'll take a look at our good old 36-month moving average. And SP said the 36-month moving average on the SPX has kept me on the right track. That's great to hear. Yeah, it really can help us kind of stay on the right side of the markets, particularly for like medium to longer term positions. So glad to hear that is working out well for you. So we'll take a look at that, of course. And then for tonight, our strategy topic is how to use support and resistance to sell high probability options premium. So we've obviously done a lot of work in the past weeks with support and resistance levels. It's part of our market overview, but certainly can and should be applied to any individual securities that you trade. And so tonight I'm going to run through how I use support and resistance, both static and dynamic, which we've also covered in a previous week's session, to identify basically the strike prices and proper levels to place my option, either single leg trades like a naked put or vertical spreads when I'm selling premium. So I use support and resistance for all of my option strategies, but just in different ways. So tonight we're going to focus in particular on how to use these levels for selling option premium, how it can actually really increase our odds of success and our edge that we have as option sellers. in fact, beyond what options math or statistics would tell us. And speaking from real world experience, I closely monitor probabilities using the option statistics. And when I incorporate support and resistance into my methodology, I've found that I far exceed the probabilities of success that the options statistics would otherwise tell us. So that's a good thing. And speaking from many years of experience, that can add to the edge that we have as option sellers. So we're going to focus on that tonight for our strategy. And then if we have enough time, we'll do our ticker roundtable and wrap up with Q&A. So let's take a look at the chart of the S&P. So we've got, again, some critical levels to keep an eye on this week and in coming weeks as well, because let me get my tool here. We're in an uptrending channel with a strong horizontal overhead level of resistance that's in very close proximity to today's close. So first, let's look at the channel. So if we look at lows from back in earlier October, right, we've got the lower range of our channel. And if we draw our upper trend line, which I didn't do a great job of, probably should have started a little bit higher here. Of the channel, you can see that this is kind of the structure that the current run up in the markets is following as far as trend lines. And so this is really a trend line channel, which we're kind of right in the middle of at the moment. But there is a major level of overhead resistance. Why are those not going away? Major level of overhead resistance nearby, and that's at 4,100. So I really want everybody to watch 4,100 very closely this week. And so if we, let me actually zoom out even further. Oops. Oh, we got 1 year on there. We're good. Okay. So if we look at past supply and demand points and reversals off of this 4,100 level, we see there's a number of significant ones. Okay, obviously, here we have confluence with the upper trend line of our upward trending channel. And then we had rejection of the 4,100 level last week with a temporary 1 day leg lower in the markets, followed by the big up move we had today. So again, so far, most of this month has really been driven by earnings, but we have the FOMC meeting coming up here this week. So that's going to be a major driver and catalyst behind directional move this week and volatility as well. And so the key reason to watch 4,100 is as a resistance level is if we can break through, and right now it's looking like there's a high probability of that. Like if we look at the options probabilities, they're starting to increase for higher S&P levels up past 4,100 in terms of the probability of touching those levels. And I've looked out, 30 days or so in expiration, which is a reasonable amount of time for us to make a move up into the upper end of this channel. So if we can break 4,100, we've got a good, again, extending this upper trend line of the channel here. we've got a good 200 points of potential movement to the upside if we can break through 4,100. We do have a little bit of resistance up around the half century mark at 4,150 and 4,200 that we're gonna have to contend with if we get through 4,100. But it's gonna greatly increase the likelihood of moving up into the upper range of this channel. Again, if we can sustain a few closes above 4,100. And so let's see, tomorrow's Wednesday. Likely we'll see that, whether that's going to happen by tomorrow. So if you look at the let me also let you know what the expected move is for the S&P. Let's see here. Look at my other computer. So so the upper range of our expected move for this week is right around the half century mark, just right around 4,150. So kind of right in between these two resistance levels. So if we do break 4,100, we might see some price stalling right around 4,150. So just be aware of that as well, because that's the upper range of this week's expected move on the S&P. So 4,150. Just keep that marked on your charts. If we do break 4,100, we may see price stall and reverse a bit. But as long as we can stay above 4,100, what we might see is if we get up to 4,150, is price come back down and we'll see this 4,100 level transition from resistance to support, use that level of support, and then potentially break through. It's also possible, based, depending on what happens at FOMC, that we just blow right through it. And so that could very well happen. But again, we're looking to get through this 4,100 level to see a continuation of this up move, and for this up trending channel to remain intact, which it's done a great job of going back to, mid-September till currently. So now, what if that doesn't occur? What do we want to, if we do get a rejection of 4,100, and for some reason, the market reaction to the FOMC meeting is negative, or we have some bad earnings, there's more earnings due out. So if we get any, slew of bad earnings and we rotate lower, we want to watch the 4,000 level, which so far has served as, once we broke it as resistance and it transitioned to support, has served as strong support. So keep an eye on 4,000 for support. If we break 4,000, because we're in a pretty tight SR range, support and resistance range here, but if we break it, it's going to widen up, the potential market moves again. Then we're going to be much more likely to see a move back down into the 3,900 level. So really just keep an eye on these century marks right now, 3,900, 4,000, millennial mark, of course, but those are both lower levels of support, 4,100, 4,200, 4,300 for resistance, and then the expected move level at 4,150. And then if we look at the, let's just run over to the monthly chart real quick, since we're on the S&P. Let's go here and pull up the monthly, and we'll add in our simple moving average. Or doesn't want to work. Yep. Got a wireless keyboard, and I think the batteries are low. All right. Okay, so looking very good on the monthly chart of the S&P as it relates to the 36-month moving average. So we've seen a strong rotation above the 36-month moving average. This could be our move off this mean reversion that we've seen in 2022, and which put us into bear market territory. This could be it. Again, I want to see us get above 4,100. This is obviously the close of the month. This is our last trading day of the month. But in February, if we can sustain a close above, so look at the high from December, right? Going back to last year, the high of the month of December was 4,196, right? So it's right there. And as I mentioned before, these major levels of support and resistance can be easier to spot on higher time frame charts. So if you look at this, I mean, there's a ton of, I mean, we had a open and close with huge volatility back in like April or May last year, but look at almost every month last year, whether it was an open or a close or a high or a low, that was one month that wasn't, was playing around with this 4,100 level. So this is why another reason I'm emphasizing this so much in terms of our medium to longer term outlook. And even though it's in close proximity to today's close, this has this technical level has a lot of weight, holds a lot of weight in terms of medium to longer term and how we may, proceed through the rest of this year and beyond in terms of bullish or bearish sentiment. So again, if we can close here, being that we're so close to the level closing out this month in February, as long as this doesn't, because right now it's resistance, right? 4,100 is resistance. So as long as this remains resistance, the markets are going to struggle. But in February, if we can close above, of course, it's a short month, and it's 28 days, right? So in just 4 weeks, we'll know if we can close above, and the stronger above we can close, because remember the upper trend or the upper line of the trend channel that we just looked at on the daily chart of the S&P is at 4,300. Now there's also resistance there. So confluence of monthly resistance as well as horizontal resistance as well as the trend line resistance. But the more we can close above 4,100 and get close to this 4,300 level, the more bullish things will be looking from a technical standpoint. But you can see how well this 36-month moving average has served as as support, as dynamic support, right? Very powerful tool. So I always watch it. So let's go back over to our daily charts, and we'll switch over to the Qs and take a look here. So we're up against the major resistance level on the NASDAQ 100 as well. And we'll really want to probably call it more of a range, right around 295. So we're really like testing that level, like as of today. Again, it wasn't a real straight line, but in 300, let's actually just draw this as a resistance box. Right, so kind of right around 295 to 300 is our resistance range on the NASDAQ 100 Qs. So this is what we want to break through. So we really want to break through 300 on the Qs to open the gates to higher prices in tech. Okay, because then we're looking at, and this is our bear market line, I believe. But we've got some room to run up into resistance if we can break through 300. And then we're looking at, fairly significant resistance around 310 to 312. But we've got, a good 10 to 12 points on the Qs that we could pick up if we can break through 300. All right, so what's the VIX telling us? Wow, my keyboard is just really going crazy. All right. So even in the midst of a upcoming FOMC meeting, we are seeing volatility remain relatively low. So that tells us a story. It tells us that market participants are not expecting a major bearish or hawkish announcement from the Fed. But earnings have also helped as well. So that 20 line, right, is major support, but right now it's resistance. Served as major support pretty much all of last year. Yesterday, we closed just below, 6 ticks below. Today, we had more of a significant rotation lower, but we did get a trade trend buy warning today. And historically, these have been very accurate when the VIX is below 20 at forecasting a volatility spike, which typically is going to correspond with a rotation lower in the markets. So this is a word of caution in the context of the bullishness that we just kind of covered on the S&P and the NASDAQ 100. But if you look historically at trade trend buy signals at VIX levels below 20, again, historically, they often result in major volatility spikes, at least up into like the 25 level. So that's like a 25% spike from a 20, to a 25, right? So that did come in today. Now, buy stop limit is at 2085, which is going to be above the high of the VIX, today's VIX print. So if we get up into that level at some point, it may not happen today, but it would be this week. Then, and we see those resistance levels hold on the S&P and NASDAQ, then be prepared for a potential sell-off in the markets. And again, there the catalyst is probably going to be FOMC. So if we take a look at the Market Watch calendar, we've got FOMC tomorrow, right? So this comes in at noon, and you can see what the previous and expected basis point hikes are. Right, so 0.25 point expectation. All right, so again, tomorrow is going to be a key day with FOMC and these key levels, particularly overhead levels of resistance. So if FOMC reaction allows us to break through these resistance levels, and the VIX stays below 20, then that's where I'm going to be loading up on bullish positions. If FOMC reaction is negative and we rotate lower off of those resistance levels, that's where I'm going to be hedging and putting on bearish positions. All right, so any questions?
Let's see. Michael's saying, please say again the predicted VIX signal. It's
Yeah, so the VIX, the trade trend VIX signal, a pending buy signal came in today on the close. So I can zoom in here for you. And as I've mentioned in the past, I pay particular attention to these when VIX is below 20 and a buy signal comes in. I mean, if you just look back, like, let's go back 5 years, right? And you look at when VIX is low. So here's the, let's see, 20 is right here, right? So when VIX is low, but particularly when it's like between 15 and 20, we often see, if you look at all the buy signals down in these low levels, we often see significant VIX spikes, usually at least up into 25. If VIX is really low, like around, 10, between 10 and 15, then I look for VIX spike up into 20, because that's, again, going to be resistance. So if you see like past VIX buy signals, so these are the green arrows, we typically get like, it's actually even a higher percentage jump from a 20 to 25, right? If we go from a 10 to a 15 or a 10 to a 20, then that's like a 50% plus jump in the VIX. So the percentage jump actually is lower if we go from 20 to 25. But we typically, when we get a buy signal with VIX down below the 20 level, we typically see a VIX spike. And you can see, just I'm zoomed out here, going back 5 years, and you can see how accurate those are. So the current one that came in today, let me get back over, will be a confirmed signal. So again, this is not a triggered confirmed signal, because for that to occur, price has to come up into the forecasted higher price, which is at 20.85. So the high on the VIX today was 20.70. So we need to get up to just a bit above today's high for it to be a confirmed trigger, a triggered entry. So what I'm doing is I'm of course watching the reaction to the FOMC meeting, watching the signal, and watching to see if the VIX starts to spike above 20.85. If it hits 20.85, that's where, and I'm seeing the S&P and the NASDAQ rotate lower off those resistance levels. That's where I'll start putting on some hedges and maybe some bearish positions. If the VIX continues to rotate lower, then and we break through those resistance levels and VIX stays below 20, then that's where I take a bullish bias and either add to current long positions that I have, or keep them open and manage them less aggressively. So that's kind of what we're looking at. So any other questions?
Yeah, that has a name, Futurist, said today CCI at 2 o'clock fell 2 points short of the forecast, but the market still went up. Do you have any insight as to, even though it failed to kind of meet expectations, it still had bullish reactions? Or you know any rhyme or reason to it?
Did you say CPI?
He typed in CCI, but yeah, the news that came out today at 10.
Let's see, I'm not sure. Today we had PMI.
Let me see.
PMI manufacturing, PMI equity settlements, market focus, but I'm not sure what the CCI is.
There was a consumer confidence at 10 o'clock.
Okay. Yeah, it probably wasn't, it wasn't anything significant to move the markets. I think markets are up to through today are mainly moving off of earnings.
That's all I got.
Yeah, I think, it's really going to be FOMC is what's really going to, other than earnings, is what's going to be driving the markets this week. So, okay, cool. So, all right. So we talked about support and resistance. Now, one other thing I wanted to actually point out too, real quick. Let's take a look at the just overall market gauges and things here. So we know kind of what sectors are overperforming, underperforming. We still have it. So we have consumer discretionary, communications, and financials are our top performing sectors currently. We have healthcare, energy, and utilities underperforming. You'll notice that our looking at our market gauges, our buy-sell ratios have moved into the green. So our algorithms have more buys than sells. Our trend is, and this hasn't happened in a while, has actually moved into bullish, almost into bullish territory. It still isn't in neutral yellow, but just on the verge. And of course, we've seen our risk gauge also move down, but we're not down to the low level there either. So we're kind of, I mean, it's kind of interesting to see this. I wanted to point it out because as we're like at these critical levels on the indices, our market gauges are right on the edge of all these critical levels where we have them split between bearish, neutral, and bullish, or low, medium, high risk. So kind of interesting that those are lining up. I think it's coincidental, but interesting that those are lining up with these key levels and where we are in the markets. So anyway, I wanted to point that out. But we do have short-term uptrends on all major indices. So for tonight, we're going to talk about, obviously we've laid a lot of groundwork with support and resistance, and how critical it is for, let's go over to S&P again, for mapping those levels out and extending them out in time to identify potential major turning points in the markets. And as far as extension of time for a support and resistance level, I tend to really try to match it with the time horizon of my trade, with a minimum of a year. So like if I have a short-term trade that I'm going to put on for like 30 days or 60 days, I look back a year for some key support and resistance levels. If it's a medium to longer term investment, I may look back 5 years or even a decade or more. But the key point I want to make is that these levels hold, and so I look at these going back even multiple decades, and they hold indefinitely. They really are never forgotten, which is quite incredible. And as I mentioned when we started the session, when I'm trading options, like if I'm selling options premium or whatever, it could be even a vertical debit spread or whatever strategy I may trade, and I'm looking at like the option statistics in terms of like what my probability of touching a level is. In other words, like, what is my probability of success? Because that's kind of what that tells me. Let me bring over my options chain. Let's see here. Right, so it really kind of tells me like, if let's just say like I want to trade Tesla, and I'm willing to tie up my capital for a couple of weeks, a little bit more, go out 17 days in expiration, and let's say I'm gonna sell put premium, so I'm bullish on Tesla, and I'm not saying that's the case, I'm just hypothetically, and I want to sell, let's say, a put or a vertical bull put credit spread or some sort of bullish premium selling strategy. When I'm selecting my strikes, I want to look at my probabilities, like my probability of touching that strike, which actually I use more for like profit target, right? So if I really use for like option buying strategies, like if I do a vertical debit spread where I have a directional bias in a stock, and I want for that trade to be successful, for the stock to reach a certain price by a certain future date and time, I'll look at the probability of the stock touching that price between now and the expiration. So that by itself can give me a pretty good idea of the chance that I'm going to make the money I'm looking to make on the trade, just by using probability of touching. So that's, again, one I kind of use more for purposes of profit targets for option buying, but I still also use it for option selling because I know that if there's a certain probability of touching a strike price that I've sold, I may have to make an adjustment to that trade, or it can help me kind of more in my trade management, my trade planning. So I look at probability of touching. But I particularly use probability out of the money, which again we've covered extensively in past weeks, in which kind of aligns with delta, right? So our delta are really two that I'm looking at. So if you look at, like, if I just blindly sold premium on Tesla at let's say a 15 delta that expires in 17 days, that would be at the 149 strike, right? The options statistical model tells me I've got roughly an 80% chance of Tesla closing. So this is probability out of the money, closing above 149 by February 17th, which is 17 days from now. So even though I just did this blindly, statistically speaking, again, we're not incorporating any technical analysis at all, I've got an 80%, almost an 81% chance of keeping that premium if I were to hold it through expiration, which on one contract I'd collect around at the midpoint, like around $226 a contract, right? So so interesting, right? Real quick too, open interest. Just want to throw this in there, not kind of getting sidetracked here, but I also want to look at open interest. So the reason I'm going to point this out is it can often coincide with technical support and resistance. If you see big open interest at a certain strike, look to see if there's a technical support or resistance level on your chart there at that level. So I'm going to look at the 150. We'll just stick with this. I didn't really plan this, but I just kind of randomly pulled Tesla up, but let's stick with this one and we'll take a look at the chart. So 150, we've got over 19,500 contracts in open interest. Whereas if we drop down to the 149, we've only got 1,200. If we go up to the 150, 250, we've only got 2,064. So there's major open interest at the 150 strike, right? So if we look at our probability of out of the money, this is where I was going with all this, almost 81%. So again, if I sold premium at 149 and just held it, did this all blindly, held it through February 17th, through expiration, statistically speaking, I've got about an 81% chance of keeping the premium I collected for selling that 149 put. But this is where speaking from experience, if I don't just sell premium blindly, which I don't, I still look at all of this, but what I look for is confluence of these statistical edges and key technical support and resistance level. In the case of selling put premium, I'm looking for key levels of support. So let's actually go over to the Tesla chart. One other thing too, because we've covered this before I get over to the chart, expected move. Right, so our expected move is in tosses just over to the right of the expiration. So between now and February 17th, our expected move is plus or minus 22 points. So that would put us, if we take this expected move and take it off of today's closing price, which was 173.22, that would put us just above 150. So if I sold the 149, that's outside of the expected move. Now that doesn't mean Tesla can't trade outside of the expected move. It just means that that I have the edge, that it won't. Right? That's all that means. So what I want to do from there is really build on the edge. So I've got figured out my options, statistics, done the math, well, really the platform did the math for me, but I know what my odds are based on just pure mathematical models. Good old Black-Scholes, right? And what I then want to do is look for key levels on the actual chart, right? Because not everybody's trading options, right? People actually trade the stock, believe it or not, right? So there's a lot of market participants making trading decisions off of supply and demand points, or in other words, support and resistance levels on the chart. All right, so I want to look to see what's going on. Well, we can see that we've got, so when price is above any level, that level is support. When it's below, it's resistance. So we've got support at 160, right around 160. You can see resistance last week, broke through, now support today. Rotated higher, again, right off roughly 160, a little bit higher, but so 3 days of closes above 160. So we've got, and then if you really look here, this is prior resistance, 3 days of highs right up on that level as well. Sorry, it's a bit small. Here we didn't come down quite to it, but that qualifies as a level of support. So what I do is I've got now one layer of support. That's my support 1. Okay, that's an edge. I just added to my edge there. 150, right? Remember our strike price that we were looking at for an 81% chance of expiring out of the money was 149. We also have major open interest at 150, which tells me that a lot of people could be betting on that strike. In other words, they may hold long positions in Tesla and be protecting at the 150 level because they see it as a level of support. It could be option sellers speculating on price staying above 150. Let me see what the highs here. We had 145, 146.50, 146.50. So I like 145 as a strike better because we do have on the earnings gap that we got last week, we've got highs right around the 146 to 147 level, but we still have support at 150. What was the high here? 148.47. It's a half century mark, right? So it's a relatively, without going further back on the chart, we might find, and that's why I said, at least I go back a year. Let's actually look further back and just see what else is going on around the 150 level. So sometimes, I'll go out several years and just see if I've selected, a strike like we did with 149. All right, yeah, see, so I had to go back. This is back in 2020, so going back to October 2020. Look at this. Look at all that resistance there. And it was very strong resistance. Why? Because price rejected it and rotated lower multiple times, and then finally broke through, and the breakout was extreme. That tells me what? This is strong. Well, it was strong resistance back in 2020, but then it became strong support. And actually, we haven't seen price come back down into this level other than this one breakout late last year since then. So it broke back through. So this actually is 150 is a support level. So that's my support level too. So I've identified 2 major levels of lower support above the 149 strike. But I might want to take a look at my options chain again and see what kind of premium I could get at lower deltas and higher probabilities out of the money. Well, 145, remember I said I like the 145 because we had several days of resistance around that earnings release at slightly higher prices. So the 145 strike gives me an 84.5% chance of expiring out of the money at a 12 delta. Oh, look at this. Open interest, almost 20,000. So that also tells me that's a key support level, 145. So I'm kind of, it's kind of a game of trial and error. I'm looking for these things. Sometimes I need to kind of adjust my strategy, my strikes, by kind of going back and forth between the options chain statistics and the chart. But 145, now, it's caught my attention. It only has a 30% chance, 30% chance of touching that price between now and February 17th. So I've got a little over a 70% chance of not even touching that. But again, this is purely options statistics. It's not in any way incorporating technical analysis. So when I incorporate support and resistance into this methodology, I feel comfortable adding 10% onto those probabilities in my favor. So they tell me 30% chance of touching 145. In my experience, and again, these are all averages. We need to take them as averages, just like trading is an average, right? If we put everything on one trade, we could either make a ton of money or lose everything. We don't do that. We call it trading for a reason because we're putting on multiple trades. Well, it's the same thing with statistical odds, right? We're looking at them over a larger sample size. So the larger the sample size, the more accurate they become. And so on any given trade, things can always go haywire. That's why we use good money management and risk management. But over the long term, in my experience, I can add 10% to those statistical odds in my favor. So really, to me, it has more like a 20% chance of touching 145, maybe even lower, and probably more like a 90 to 95% chance of expiring above 145 between now and February 17th. Because I'm also using key technical support levels on my chart. And not everybody's going to see those. Not everybody's going to go back to 2020 and spot what we just looked at back here and the breakout that ensued above 150, and that there was a lot of buying pressure or demand above 150. Now we're, a year and a half later, people aren't going to, most people aren't going to go back and look at that. Okay. So those are the things I'm looking to line up to make my trading decisions. Again, this isn't a trade I'm going to take. I'm just using this as a hypothetical example. But those I'm looking for the confluence of those when I'm selling option premium for support and option probabilities to line up in my favor, or if I'm selling, if I'm bearish on a stock. And I'm selling, let's say, call premium, like I'm doing a bear call credit spread. I'm looking for my short strike and my call spread to be above, ideally, multiple layers of resistance, right? So I want to identify strong levels of overhead resistance and make sure those line up with, my options probabilities so that they're in my favor. And so doing that, we can beat the option statistics. We can beat the odds. I think it was last year, we had like 22 or 23 consecutive winning credit spread trades, selling the strikes at the exact same delta, at a 20 delta. So so this is kind of just to demonstrate how this can, using support and resistance in combination with option statistics, can greatly increase our edge and our probability of success. If you sell a 20 delta on, let's actually just go over to, let's go to like the Qs. Right, so if you sell, we'll just go out February 14th expiration. So 2 weeks from now, if I sold a 20 delta put on the QQQ, it's going to put me right at 280. Right, I have a 78% chance of that expiring out of the money if I hold it through expiration. Right, so statistically, I should be losing about 20% of my trade. So 2 out of every 10 trades I should lose. But instead, we have win rates in the lower to mid 90 percentile range selling 20 deltas. So I'm beating the odds, the statistical options odds by like 10 to 15%. Right, and that's over the long term. Since we've started the service, that's the case going back like over 7, almost 8 years. Right, so we can beat the odds using support and resistance in combination with the option statistics. So we don't want to ignore these. They're still quite accurate, but we can again beat the odds, do a lot better using support and resistance in our decision making. All right, so any questions, Richard? I kind of went a little bit long on that explanation without pausing, but if there are any questions, be happy to address those.
No, it was a great talk. I'm glad I didn't have to interrupt you. It was very helpful for everybody listening tonight. Definitely watch this again. If you miss anything, if you want to hear something, I promise you, if you watch these things twice, you'll pick up just as much the second time as you did the first time. And like, I'm guilty that like had the privilege of hosting these with Jeff for, like you said, over 7 years now. And I always learn something every time. So yeah, I encourage everybody to watch these over and over. One question that came through was from Steve. He was wondering, like when you're doing your VIX calls, are you still doing like 60 days out to expiration on those?
Yeah, I'm actually still holding my VIX call spread. What I ended up doing is I sold a premium on the S&P to finance the cost of that. So if the VIX doesn't spike in the next 2 months, then I don't lose any money because I finance those with the sale of puts, assuming the market doesn't crash 20%. I sold very low delta puts on the S&P, like a 7 or 8 delta. So I don't really care if the VIX doesn't spike because then I don't lose money. I don't lose anything. As long as, again, the market doesn't crash. It'd have to crash like 15, 20%. But yeah, I still think there's a high probability of the VIX spiking, especially considering today we did get that buy signal below 20. So I am still holding my VIX spread. So it's good through, let's just see, actually. I can't remember what expiration I have on that.
I was gonna say, like, while you're still in here on Tesla, someone was asking, well,
I can go back over to it. Yeah, I got my VIX spread out to the March 22nd expiration, so I still have 49 days. I've got my, this is a debit spread. So I've got a debit spread on a 5-point wide spread on the VIX, long strike at the 24, short strike at the 29. So I still have that on. All right, sorry. Yeah, you said to go back to Tesla?
Yeah, does that let's say you were looking to sell puts on Tesla, does that down arrow warning from trade trend cause you any pause, or do you wait till you have the confirmation first? Or
yeah, so good question. Actually, that's a good transition because I was going to talk a little bit about, even though we're kind of focusing on selling premium, I alluded to using probability of touching for profit taking on option buying strategies. So yeah, it does give me pause because look at this major resistance level. So again, we just looked at a support level. So it's a great kind of I don't know what you'd call it, like adage or whatever. I don't know the term correct term to use, but you take like two traders and one is bullish and one is bearish, and they both put on, one puts on a bullish options trade, the other bearish on the exact same stock with the exact same expiration, and they both make money. That's very possible, right? Because it depends on, where you're placing your strikes, what your expirations are, etc. So you could have somebody take a bearish position off Tesla, while also taking a bullish position, selling premium like we just looked at, and they could both still make money. Which is kind of the beauty of options. They could also lose money, right? But yeah, absolutely. So there's a major resistance level at 180 on Tesla. Boom, boom. Look at all that. And then look at this. And yeah, good observation. Sell signal, sell signal today. We had a big bullish move up in Tesla today, but we still got 180 resistance. So on Tesla, this is purely a forecasted a forecasted bearish signal if Tesla trades down below today's lows. So the algorithmic entry price is 161.77. So it would have to come down below the low for this to be a triggered signal within the next 3 trading days. And if that occurs, then that further strengthens this 180 resistance level. So see how you can use this to really plan ahead, right? Because this 180 resistance level, as I just drew, going back, many months, was there. It was in place. So I could have known long before, as we sold off late last year in Tesla and then rebounded, I could have known during the midst of this rebound where I'm likely to encounter resistance, right? And have a tough time getting through. And sure enough, that's what's happened. So 180 is a strong level of resistance, right? And we got a sell signal. So if we get the follow through and come down into 161.77, this could be a good bearish play. So if I traded an option strategy, like a bearish option strategy out this, well, I could do like I could do what we just looked at with option selling and run through that exercise, looking for strikes above 180, or maybe even higher, because there are strong resistance levels even higher up, particularly 200. I may not be able to get, sufficient premium by selling above 200, but I would certainly be checking that, because then I've got 2 really strong layers of resistance to pad my bearish position if I'm selling premium. But there are other ways to obviously play this with options. We could buy a bear put debit spread, right? We could buy a put and sell a put, vertical debit spread, same expiration. So we pay money up front for that. But I would set that up with a contingent order. If we hit 161.77, I would enter the bearish put spread. And then what I do from there is really before I would route the order, I want to look. So looking at the chain, I want to determine my time horizon. How much time do I want to tie up capital? How long do I expect this? If we do get a rotation lower in Tesla, how long do I expect the move to take? And then I'm looking on because it's a down move, and it would be a bearish debit spread, vertical debit spread, by buying a higher strike put, selling a lower strike put, and so therefore creating a debit. I want to look to see if the stock moves down, which would be my directional bias, taking this sell signal. How far would it have to move for me to make the risk reward ratio I'm looking for? Let's say I want to make a 2-to-1 risk reward, right? So maybe I look to sell buy, I don't know, maybe like a 28, 20, let's say 28 delta. So maybe I buy the 160 and sell the 155 or even 150. I would set that trade up. Let's just do it real quick. Like if we just bought, let's see, well, actually, what I would do is I'd go over into my Analyze tab. Okay. And I would go over to Tesla. Right. And then I would add a simulated trade. Okay. So let's just say I think Tesla can make a significant move down off this 180 resistance level in the next, 2 to 3 weeks. And I want to buy a vertical put spread. Right. Let's just go down to like a 150. Let's actually make it a 10-point wide spread. So, buying a 160 strike, selling a 150. So then I want to see, okay, what does my risk graph look like? Well, I'd be paying for this 10-point wide strike spread. I'd be paying 238 a contract, right? So for demonstration purposes, we've got that set at 10 contracts and the spread. So it cost me $2,380 to put the spread on, to buy the spread. Let's say I want to double my money. Like I'm looking for 100% gain, right? So I'd need to make roughly $2,400. Well, let's see if I could do that between now and February 17th. Well, yeah, actually, I could do a lot better. So my max profit potential in this trade, if you look down here at expiration, is $7,620 on a $2,380 investment, right? So yeah, I mean, I could almost triple my money if the trade's successful. But where does it have to go? Well, to hit my max gain at expiration, it's got to go down to right around 150, a little below 150. So then what do I do? Well, if I know that, and that's to make my max gain, maybe I don't, maybe I'm looking, let's just stick with the original plan. Let's say I'm looking to double it, right? So $2,400 at expiration. So I actually only need it to go roughly to like 155, right? So right in between my spread to double my money. So then, all right, that's good information. So that's my next step, is looking at the risk graph and what my key strike price levels are. So 155. Well, what are my odds between now? So first, what I look at is, okay, I've got 17 days for this trade to work out in my favor, right? What's the expected move? 22 points. That could be up or down. Well, 155 is, let's see, 22. Yeah, so it's within the expected move. If we take 22 or almost 23 points off of this, we're down at 150. So I can stay within the expected move and hit the 155 strike. And what's my probability of touching that strike price? Well, purely based on option statistics, it's almost 51%. So if I put this trade on blindly, I have a 51% chance of doubling my money. That's what the options math is telling me. Now I've added in other factors, right? Resistance, trade trend sell signal. I'm not trying to build a case here to try to encourage you guys to put this trade on. I'm just telling you that, these are the things I'm looking at, no matter whether it's Tesla or Apple or anything I'm trading. 51%. Well, I think I can probably add 10 to 15% on top, to that edge by using trade trend, using resistance, using expected move, all of these things. So I might have, realistically more of like a 60 to 65% chance of doubling my money in this trade, maybe even more if Tesla really tanks off this resistance level. but I want to wait for confirmation of the trade trend sell signal. I want to wait for Tesla to actually trade down into the suggested entry of 161.77. Because then if it doesn't, then I just don't put a trade on, no big deal. And that just gives me more confidence and confluence that this 180 resistance will have a greater likelihood of holding, right, as a resistance level. But 155 is, not too far down, so it's very realistic that if we do break, we could hit that. Of course, we'd have to rerun that exercise when Tesla's down at 161.77. So we'd probably be realistically looking at lower prices to hit that 2-to-1 risk reward return, but that's based off current closing prices today. But just want to give you an idea of, kind of the thinking behind that, the process. So whether it's option selling or option buying, we want to be looking for support and resistance in key option statistical information to make these decisions and know what we're getting into, right? We want to know what our risk is, our reward is, what our probabilities of success are, and where we might encounter difficulties, where our edge might be, by identifying multiple layers of support and resistance. When we're selling premium at strike prices past those layers, the more we can find, the better. So those are all parts of the process and the methodology. So I'll wrap it up there. We went a little bit over tonight, and apologize we won't have time for Rick take a roundtable, but wrap it up there and open it up to final Q&A. If you have any questions on whether it's selling premium or using support and resistance in the context of selling premium, or any of the things that we covered tonight, maybe the broader markets or FOMC or anything you guys want to ask, we'll open that up before we sign off.
Let's see. Everyone said is really helpful. A lot of really positive comments about Zillion. We have a lot of new Zillion people on.
Oh, great. Welcome, everybody. Yeah, I apologize. I didn't use Zillion much tonight. I apologize for that. But we typically do use that, the platform more in our sessions. So we will in subsequent weeks, but went over a lot of the kind of basic high level stuff. We'll get into it deeper because one thing that I'm going to actually start incorporating into a lot of our strategy, and we didn't, it's another thing we can even add additional edge beyond what we covered tonight with support and resistance and trade trend, is divergence cloud. So that's a really powerful feature within the Zillion platform. So we're going to also add that in because it can also add percentage points of probability of success in our favor just by adding the divergence cloud into that, which is, again, a really powerful feature of Zillion. So we'll do that in coming weeks. But yeah, I apologize I didn't use much of that. But welcome to all the new Zillionaires. Great to have you guys.
Let's see. I guess the last question I got here. Since FOMC does lead to big moves, when do you act? Do you kind of anticipate ahead of time? Do you kind of wait to see what the move is next and then you react? Or
yeah, since it's I don't like playing like very unpredictable things, but it depends on the strategy, right? So I'm more likely to use option selling, like premium selling strategies around unknown events like earnings or FOMC announcements. And I can sell, low delta, high probability out of the money spreads or puts, because then we get volatility crush that benefits those types of strategies following the announcement. And oftentimes they don't exceed the expected move. But I always am looking, and that's a great question. Glad it was asked, because the other thing is when we have a major announcement like FOMC this week, I'm looking at, so just go over to the SPX is a great kind of proxy to use for this. I'm looking, and for multiple reasons. One, obviously, it's the S&P 500. It's a major index, and it's a benchmark for the entire market. But also because it has a plethora of expirations to choose from. So I can actually go out even to tomorrow's expiration and see what the expected move is. So after FOMC, the market is expecting a move. There it is. Up or down of 52 points. So we have an expected move of 52 points plus or minus tomorrow. That's great to know. if I want to sell premium around the FOMC announcement on the S&P, I know where to, and again, I'm going to still run through everything else we just covered tonight, technical support, resistance levels, etc. But maybe I want to sell like an iron condor around FOMC tomorrow. Well, I know where to place, I know where my expected move bounds are, 52 points, plus or minus. And then I also want to look for technical support and resistance at those levels if I'm trading an iron condor. I want to look at options probabilities and statistics. So again, these are all things that build in the edge to being profitable long-term. So always look at expected move around key announcements. So in the case of the S&P, it's a great tool, even if you don't trade options, because we can actually see with the many available expirations what even like on the day of an actual announcement like FOMC tomorrow, what the expected move is based on what happens. So we don't necessarily know which way it's going to go, but often when we get in those situations, there are appropriate strategies like an iron condor.
Hey, Jeff, could you just take just a couple minutes? We have a couple of really fresh new people that are using Zillion. Can you pull up Zillion real quick if you can?
Sure.
And just give a quick, brief overview of the signals as far as the arrows and what the numbers in them mean?
Sure. Okay, so for Zillion users, the signals, which are the same algorithm that we were just looking at on the Thinkorswim platform, they're just depicted a little bit differently. So the symbology is a little bit different. So when we saw like the red and green arrows on the Thinkorswim platform, those correspond to the diamonds on the Zillion platform. So a white diamond below a candle is a pending buy signal, and a white diamond above a candle is a pending sell signal. So like for instance, back here, we're looking at the S&P 500 index chart here. There was a pending sell signal. So when we have a pending sell signal, the entry is always going to be below the low of the candle. We're actually in an open buy signal. So when we have an open or a buy signal, so again, white diamond below the candle, the entry is going to be above the high of the candle. And where you find those entry prices is up here above at the top of the chart. And you'll actually see this is already a triggered entry, right? Because we see S&P moved up into the entry price, which was at 40.2974, right? This chart's not updated. This is not as of the close today. That's yesterday's close. So, right. So 40.2974. We moved up higher today, obviously on the S&P. So this trade is currently in profitable territory. This trade signal. So again, white diamond below the candle, buy signal, and you'll confirm that with the instructions up here at the top of the chart, whether it's a buy. Open buy or a sell. So like right now, there's no sell trade. So we know it's a buy. We know what the entry price was. So this one's already open. If a signal triggers, it hits the entry price provided by the algorithm, moves in the anticipated direction, you'll get a series of horizontal red dashes. Those are our trailing stop levels. And that is actually also provided because, yeah, you can visualize it on the chart, but if you want to know the exact number, this is SL, stop loss. That's our stop loss level. So if you're trading these, you can actually get all the information right up here. So like on this previous sell signal that triggered, right, we had a triggered entry, a nice move down, and our trailing stop. So this one picked up, like 20 points or so. Then we had a buy signal. So look at this buy signal. These white diamonds. So again, they're just a warning. They're not when you want to place the trade. Because again, here entry is above the high of the candle. Okay. So notice this buy signal, the last one came in on December 29th. So at that time, on December 29th, it would have told me the entry price up here above the chart, which again is going to be just a few ticks above the high of the candle on the 29th. That wasn't reached the next trading day on the 30th. It wasn't reached actually till next week which of course the markets were closed for New Year's holiday. But 2 trading days later, it came up and hit that entry price, right? So that's why you see the confirmed buy signal or buy symbology here. That tells us that on that candle, we hit the suggested entry price. So if you were taking a long position off this signal, you would have had an order in place to enter to the long side at the suggested entry price at the time. And then this one made a nice move in the anticipated direction. See, the S&P went up, and all along the way, after each candle is printing, it gives us our trailing stop level, right? And if we're using the trailing stop levels for our trade management, we would adjust those each day after the candle finishes printing, right? And so it looks like right around probably a bit above 39.40. So entry would have been probably right around 38.60. And exit would have been, if we were using the trailing stop management, would have been around 39.40. So this signal picked up about 60 points, 65 points. That was the move on this one buy signal. So now we currently have another open one. So that's kind of how the signals work. Hopefully that helps a bit. We also, for your you new Zillion members that joined us this week, we have a full suite of video tutorials in the members area. So make sure to check those out, because in those video tutorials, we also explain all the features of the dashboard and how they all function. So that'll also help. But this is recorded, so it'll be posted in the YouTube channel, Altos Trading YouTube channel. You can watch all of our past weekly sessions. For those of you who are new to us this week, we do record these every week, and they're posted in our YouTube channel. But in any case, if you're a Zillion member, you can find all the tutorials in the members area. It also goes through like how to use the divergence cloud, which again, we're going to be adding into our repertoire moving forward. But you can see the incredible power behind the red and green cloud as it predicts directional moves. And when we use that in combination with the signals and support and resistance, again, every week we're building on our edge, right? We're adding all these critical things in that give us a tremendous edge in the market, allow us to potentially make a lot of money. That's what we're all here to do, right? So then those tutorials can also be found in the members area.
All I got.
All right. Well, I want to thank everybody so much. Thanks for being here. Again, welcome to all the new Zillionaires. If you guys have any questions on Zillion or are interested in joining, you can shoot us an email, support@altostrading.com. We have a really special deal running actually this week on Zillion if you're not currently a Zillion member. It's the only place you can get the divergence cloud. All of our really cool scanning and proprietary indicators only in the Zillion platform. So you guys can check that out. But I hope you guys got a lot out of it. Thank you, Rhonda. I appreciate it. Thanks, Shirley and Rosemary and everybody. Really appreciate all of you being here, all your dedication and hard work. And we plan on seeing you next week, same time, same place, and wish you luck this week in the markets. See you next week.